good afternoon. So today we are going to discuss about due process of IFRS. Okay. So IFRS are standards, you know that. Standards, they are set up by consultants. Okay. So we know that IFRS are standards and are set up by standards, and the standard committee consists of 14 member countries, or the executives from 14 member countries. Okay. And they are developing the IFRS through a process or a 6-stage process, and that is called the due process. Can you please read that? Anyone? Priya?
IFRS are developed through an international consultation process called due process. This due process involves interested individuals and organizations from around the world, comprising of 6 stages with the trustees of the foundation.
So it consists of 6 stages developed by consultants. Okay, so that is called due process of IFRS. So now, stages of due process. So we know that there are 6 stages, and the first stage is setting the agenda or work plan. That means we are going to do something and we are planning. Okay, consider that in mind. We are planning, we are about to do something. So what do we want to do? That is the first thing, setting the agenda, what we are going to do. The next is planning the project. So first step, what we are going to do. So the next is how we are going to do. That is planning the project, either by group or by individuals. So second step is planning the project, and the third step is development and publication of discussion paper. So IFRS are standards, you know. So these standards are set up by consultants or executive bodies, and they need discussions to bring up standards, so that they publish papers, and the first publication is this thing, development and publication of discussion paper. It is through this paper they receive the comments from the experts or the consultants. Then after that they modify the discussion paper. So the fourth stage is development and publication of exposure draft. So the name itself indicates it is an exposure, right? So after we get a modified draft, we expose that to the public. Then only we can receive the information from public, their suggestions, their feedbacks, their feelings, the issues they are facing. Then only we can bring standards. So the fourth step is development and publication of exposure draft. Fifth step, development and publication of IFRS. So we got the discussion, we published a paper, give an exposure to the public. So the next stage is development of IFRS. So once we got the suggestions and we got idea about the issues they are facing, then we can bring up its standards. Okay, so the standards can rectify their issues. So the next stage is bringing the standards. Sixth stage is procedure after an IFRS issue. So we got the standards. So the next step is, we know we want to educate the people to use it. We need to ensure that they get it in the right sense and they are using it in the proper way. So the last step is procedure after IFRS. That means educating the public. Okay. So are you clear with that? Can anyone please explain? Joni, just read out.
Setting of
Agendas.
Planning the project. Developing and publication of discussion paper.
Yes.
Fourth one, development and publication of draft. Development and publication of IFRS. Procedure after IFRS.
Okay, thank you. So the next is fair presentation, or just simply the elements of IFRS. IFRS are standards. So the first standard, International Accounting Standards, that is presentation of IFRS. So the components of IAS 1 are financial position, financial performance and cash flow. What do you mean by financial position? Financial position. What? Profit or loss. What about the assets and liabilities? So the financial position just indicate that the company having the more assets or more liabilities. This is the balance sheet. Second one is financial performance. Either it is a profit company or it is a loss company. Third is cash flow. Cash flow means inflow and outflow of cash. Okay. So IAS 1 or International Accounting Standard 1 contains the three main components. First one, financial position. Second, financial performance. Third, cash flow. Next is requirements for FIA presentation of International Accounting Standard 1. Last one, read out.
Selection and application of accounting policy.
Yes.
The information provided should be relevant, reliable, comparable, and understandable.
Disclosures.
Additional disclosures when required.
Okay. So the first one is selection and application of accounting policies. There are so many accounting policies. According to the situation, we need to adopt any one among them. Okay. So that is one of the major requirement. The second is information provided should be relevant. There are only quantifiable data are expressed in financial statements, not qualifiable data. They are quantifiable data. Data in numbers. So third is additional disclosures when required. If there is any additional disclosure required. So in the case of asset, you know that depreciation is calculated in several ways. So it should be disclosed that which way we are using or which method we are using to calculate it. So that about the requirements. Next is advantages of IFRS. The standards, advantages of standards. First one, harmonized presentation of financial statements in the world. Second one, facilitating cross-border listing of securities. MNCs have common accounting language, easy appraisal of companies for acquisition. So the first one is harmonized presentation. We know that standards are used by all among the countries. So they are used by every people or every business organization across the globe. That is harmonized presentation. Second one, facilitating cross-border listing of securities. We know that India is having business with so many countries. So the outside countries are listing their securities in our countries. Example is Hero, Honda, Maruti Suzuki. Now these companies just splitted and Hero Honda got Hero and Honda. Maruti Suzuki got Maruti and Suzuki. They are splitted. But in the earlier ages, they were one country, they were single company and they got listed in our stock exchanges. And the third is MNCs have common accounting language. What is the language of accounting? What's the language of accounting? Language of accounting. Language of MNCs. What is the purpose of MNC? What is their purpose of conducting business? Anyone? Dean. What? What for? For profit making, right. So the language of MNCs are almost same, profit. So the fourth one, easy appraisal of companies for acquisition. IFRS are standards for what? For preparing financial statements. So the financial statements are read by so many stakeholders so that they can know about the company's position or various companies' positions. So if the one is a major weak company, so the strong company can acquire the weak company. So IFRS provide a way for acquisition. Next, disadvantages of IFRS. Read out. Cost of implementing IFRS, lower levels of details as compared to rule-based system. So It requires cost to build. There are several discussions, publishing, etc. needed. So lower cost, lower levels of details as compared to rule-based system. There are not many details that are discussed in IFRS. So it lacks many more information. Lower levels of details as compared to rule-based system. Next one, harmonization of standards. What is harmonization? Harmonization. What is harmony? Harmony. Peace. Peace. Okay. So harmonization here means the unity. Okay. Harmonization of standards. With the emergence of globalization, the countries began to conduct cross-border transactions, either in trade, goods, services. So they need to calculate or they need to record it in books to understand about the profit. So they needed a unique way of recording these transactions. That made the way to the standards or the IFRS. So that is called harmonization of standards. And what is this harmony for? What is this? What is the purpose of this harmony? What is the purpose? It helps to enhance a platform for wider investment choice, a more efficient capital market, lower cost of capital through wide range of fundraising instruments. So it helps the investors. How? Helps the investors. How? No. They can read the financial statements. Okay. If I am interested in one company or I am interested in one company, then I can read or I can get the financial statement from the website. Okay, then I can know about the company. So if I am interested in investing that company, I can simply go through the financial statement and I can make the decision whether I should invest or not. So IFRS brings harmony so that it helps the investors and a more efficient capital market. Capital market for what? For what? Purpose of capital market? Selling and buying of securities. Okay. Lower cost of capital, wide range of fundraising instruments. So are you clear with this? Next, advantages of harmonization. Just read out the underlined portion only. Pooja, just read the underlined portion.
Compare financial results.
Okay.
Better accessibility.
Okay.
Better management control. Transparency for takeovers and mergers.
Okay. So, first thing is compare the financial result. It helps the investors. They can compare the financial statements and conclude a result. Second one, better accessibility. They can access the foreign markets. Okay. Next, better management control. If a company is a loss running company, then it can manage and can control their business activities to make up that company to a profit making one. Okay. Next is transparency for foreign entities for takeovers and mergers. Just the financial statements itself is transparent. Anyone can read the financial statement of any company if that company is listed in the stock exchange or if there is information about the company in the website. Sure. Underlined portion.
Rules and regulations, rotation of accounting staff, better control, tax authorities, calculate tax rate.
Do I need to explain that? Yes or no? I think it is understood. No need for further explanation. Okay. Next is barriers to harmonization. The purpose of preparation of financial statements differ from country to country. There are several purposes for preparing financial statement. Either it can be a profit-making organization or service-minded organization. So the purpose might be different. Second, existence of different legal system prevents the development of certain accounting practices. There are certain accounting practices that are prevailing in our country, but that are not prevailing in other countries. Okay, so there might be clash. That is, the relevance of users group of financial statements changes from country to country. Relevance of users. Users might be me, you, business organizations, companies, government, everyone. So their relevance may be different. The absence of strong accounting body or business body. Which is the accounting body of India? Which principles we are following? Gap. Which gap? Indian gap. Gap means? Accounting policies. Okay. So the last portion is comparison between IFRS and Indian gap. First one, principle based. IFRS is principle based. What is the definition? What is the difference between principles and rules? Principles and rules. Who develops the principles? Accountants. Experts. Accounting principles. Board of directors. Consultants. Accountants. Okay. So, IFRS is principle based. There are several theories or principles, or there are several discussions that have done for the principles or for IFRS. Then Indian GAAP, they are rule based. That is, there are certain rules. This should be done in this way. This should not be done in this way. Okay. There are rules, but there are no several studies conducted on behalf of that. Then works within the set of laid down principle. This itself understood principle based. Work based on rules made for issue as they arise. So the rules based, whenever an issue arises, they works on for rectifying that issue. So they are rules based. There are no certain principles, they are just rules based. Third, more use of professional judgment. As you know that if they are principle based, there might be judgments, and that should be conducted by the experts, consultants, accounting practitioners, etc. Indian GAAP used for business situations as they arise. Do not prescribe any form for preparing financial statement. We are free to prepare financial statement according to our will. Next, Indian GAAP prescribes specific form. Last one, based on fair value concept, based on historical concept. So, fair value concept means the current value or the market value. If we sell this book in the market, what we will get from this? If I bought this for 20 rupees, then I will get this in the market for 15 rupees. So that is the fair value. Okay. And the initial price is the historical value. Okay. So that's about comparison. So I hope you are clear about IFRS. Thank you.